Welcome back to the Counterculture Agent presented on Loan Officer Success Live. Hey, today we're doing something a little different. Normally, I'm the one asking Sean the questions, but in one of our recent conversations, Sean said something that caught my attention. He basically said, I've got 50 loan officers I could send to a deal to. Why would I send it to you? And I thought, this is a question every loan officer needs to be able to answer, because great service, communication, and closing on time, those things matter, but is it really enough to earn the business from a top producing agent? So today we're going to flip the script. Sean's going to ask the questions. I'm in the hot seat, and we're going to talk about what agents really want from their lenders. Sean, let's get into it, brother.
I love it. Thank you, Devin. I'm excited to talk about this. I've been in real estate for a long time. I'm not going to give the resume, but it's more than 500 transactions. And as you can imagine, people, lenders especially, they get into the history. Like anytime you meet, right, you're gonna meet an agent. Before you start offering your value or even spending any time trying to get to know them, you're gonna throw them into your little system to find out how many transactions have they closed. Are they talking a lot of noise, which most agents do. They say how great they are, and then you go and find out, man, you've closed 10 transactions in the last 3 years. I mean, I'm happy to be a lender partner for you, but I'm not going to go out of my way to get one deal a year, right? I mean, that's not going to be something that as a lender wants to spend the time and energy going after. So over time, I had my own brokerage for 10 years. I worked at EXP. I've got 7 Icon Awards, one of probably less than 100 out of 85,000 that actually got that far. And I get plenty of traction, and people want to partner with me. And I tell them up front, I said, you don't want to partner with me. I'm mean. I don't spend a lot of time giving you a lot of fluff. If you can't execute and do everything without my input at all, I don't have time to do your job. So that used to be the way I used to think about the lender partnerships. That's within, I'd say about 2 to 3 years ago, I had a mind shift. And actually, I've changed the way I view. And honestly, Devin, I probably wouldn't talk to you if I had not changed the way I view lenders. And the way I view lenders now is I find ways that I can partner with them in a way that would be beneficial. And, like you and I have a good relationship. We're both benefiting from sharing experience, and we have, a little bit of the charisma and talk show host type thing going on. So we're not boring. I think that helps. We're not just giving dry information without any much personality. Right. But now I've realized that I need to find ways to partner with them. And, over time, I see where real quality value propositions are for lenders if they want to try to start building relationships with agents. And we're going to go past, and I tell lenders this all the time, hey, I want to come teach one of your classes. Okay, great. What do you want to talk about? Oh, well, I got these programs. Stop. Agents do not care about your stupid programs. And I'm saying this in a really negative way because we don't. Programs fix niche problems. They are not going to build my business, and I've seen some really cool programs, but man, they're so freaking niche that I can't apply that to my business. It's not going to help me sell more houses. What you have to do is build the relationship, show that you can do what you can do, and be really good at it, be on top of it, answer, be ahead of things. And some point, hey, by the way, I've got this product. The agent will listen because now you've broken. It's like any other relationship. You can't, it's like preaching the gospel, right? You got a homeless guy on the street, and the first thing you start talking to him about Jesus when he's dying of hunger, start with the relationship, and then they will hear you. That's always a good place to start. So I wanted to kind of kick it off there. And I do have do you have any comments or any of that, Devin?
Well, I think at the end of the day, I do 100%, and first off, I just got to say you're a hell of a nice guy, Sean. So, give yourself a little bit more credit than that. But at the end of the day, I completely agree with you, in regards to the products and some of the niche products, because we have to assume as originators that our agents already have these programs available for them. Even if maybe ours seems super special, it doesn't change the fact that, as you talked about before, you've got 50 lenders holding up their hands saying, hey, pick me, pick me, pick me. And we all start to sound about the same if all we're talking about our programs. Okay. You talk about value propositions. And again, a program can be a value proposition for the right agent who we've talked about this in our previous conversations, has an avatar that meets that particular program, right? Because ultimately, like we've spoken about, You have a particular avatar for who you're looking to do business with. And if my niche program happens to fit that avatar, that's great. But it goes back to the relationship side of the business. You talk about this being a relationship. I think it's the same way. If you're going on a date, right? Are you literally leaning in for a kiss the moment that you walk in the door, right? And if you are, hey man, way to go, Casanova, right? But if you're like most of us, you're asking questions to get to know the person to see, are we a good fit for each other? Do we jive with each other? Do we have a good vibe and a good chemistry? And if we do, then great. This is somebody that we want to do business with, and maybe we can build a relationship over time. So
Sure.
I couldn't agree with you more.
I will add what makes it a little harder for me, and I'm not, obviously all agents will say the same thing. I'm not the average agent, right? I'm not the average agent. What I look for are people that are going to partner with me on my podcast. I have podcast sponsors. I have 5 podcast sponsors on my podcast, Real Estate Success with Sean Corbett. And I have a lender partner in there. That's a part of what I have. And I have expectation that that's what you'll be doing. I also do a lot of events and training events and stuff like that. And I have my lender partners will come out and they'll sponsor the event. That's something else that we do. Devin and I are trying to create an event, and I won't have a lender partner sponsor his event. I actually have Tyler Coleman with Black Tie Moving here in Dallas Fort Worth. I'll give him a shout out. He's one of my sponsors of my podcast.
I like it.
And he's very good, and he's on top of his business, and he quotes everything himself. So he'll actually sponsor the event. But anyway, I also do that. That's not something that agents do, right? And then I have my book. I have some sponsorship benefits with the book that I have created. I've got a community. I have things that agents and lenders don't value, but I do have specific things that when I do partner with them, that's going to make all the difference. And I want to kind of work through that, right? A great lender should help you win clients, convert buyers, solve problems, structure better deals, and ultimately help you grow your business. So today I want to dive into that, and I want to do it from the agent's perspective. What should we actually expect from a great lender partner? And when I say it from the agent's perspective, I'm going to ask and prompt things to Devin that allow him to respond, and then I'll give a counter response, and I'll grade it if he's good or bad. No, I'm just kidding.
Ooh, no, grade me, grade away, my man, grade away. I'm up for the challenge.
Because I like it. I mean, I can certainly push back in a lot of different spaces, and you and I had the conversation before about a lot of these things, and you can go into a lot of detail. I do want to get really specific and targeted because we don't have unlimited time, but I'll give you a chance to kind of work through it. So one of the things is it's often we find that lenders like to offer, certainty on everything, right? Oh yeah, they're good. Everything's good. I want the deal. You want the deal. And the deal is good. I think certainty over promises can create a problem for you. What does that mean to you as a lender talking with an agent and trying to be a lender partner with them?
Well, I think, Sean, one of the things that we always talk about is under promise and over deliver, right? And I think too many people do it exactly the other way. They over promise and under deliver, right? So one of the things that I've always coached and practiced personally, right? Because you got to practice what you preach, is to make sure that your partners understand what type of client that we're working with. And I know a lot of people are really quick to want to get a pre-approval back. Same day, I got to get a pre-approval over there right now, right? And I think it is important to let your agent partner know quickly what they have in hand, but at the same time, there's different grades for different clients. And I think we talked about this the other day. You have your A clients, you talk to them, they're W-2, same income, they've been in the same job forever. They have, plenty of assets. They've got lots of equity in the exit home if there's an exit home. These are people that we can qualify rather quickly. But you have B clients, right? And these are people that have a little bit more caveat and may take a few more days to get put together. And then you have C, which are clients that, hey, these folks may take a little bit more time. Be patient with me. We may be able to get a mortgage ready, but at the same time, don't go throwing them in the car and driving all over town, because at the end of the day, they may not be the right client for you right now. And I think it's really important to make sure that when you hand over that pre-approval letter, that you can give it a certification that this is somebody that I've evaluated, I've crossed the T's and I've dotted the I's, and this is somebody that you can feel confident putting in the car and go and show a home to. I've seen it happen so many times where they don't look at meaning loan officers, don't look at the documentation up front. They don't make sure that they've verified what the clients told them on the other end of the phone. And when we get closer to contract and they start asking for documents, guess what? there's a problem. And now they're scrambling to fix an issue that could have been resolved on day number one. And if the agent was, really asking, hey, I need this quickly, they need to have the courage to stand up and say, hey, look, here's the deal, Sean. I know you want this one quickly, but here's the things that I need from this client to make sure that they're going to be fully qualified so you can have confidence in the approval that I provide. Would you rather me give you a piece of paper that says they're pre-approved, or would you rather know with confidence that this client is fully approved, and when we find a contract, we're going to get them through to the closing table with little to no problems?
Sure. Yeah, no, I mean, I can give some immediate feedback on that. I'll tell you the number one thing is if you're getting flimsy approvals because you want approvals, then everybody loses, right? That's a problem. You look bad, the client is now ticked off because they thought they were qualified. The lender now realizes, well, I had what I thought was enough, but my underwriter rejected it, and now they need so much. And they always do. They go to the underwriter, right? You got to play that game. Underwriter will have their own conditions, and then you go through all the conditions to get them to the next level. Getting it deep into that level as much as you can and being able to have A as soon as you can would be great. I'll say something that you probably never heard before. I have a pretty good or a pretty high IQ when it comes to lending and what requirements are needed in order to get people qualified. Yeah. I know DTI, I know income, I know expenses. I start asking them about their personal debts. I actually, and it's funny because I've always done this anyway. I know if I'm wasting my time or not, is I already kind of pre-qualify them in a sense. And that actually the company I work for now actually makes it a part of our system to save everybody time and energy. We are going to try to find us a quality people, and we're still going to send them to get approved. Right. But it's okay to ask, debt to income and some of that. So we're not all wasting our time too.
That's right.
I know that lenders have this habit of knee kick. Well, just fill out the application, just fill out the application, just fill out the application. And it costs everybody time and money. You got to pay for the credit report, and you realize, holy cow, this guy doesn't even have any income, right? Or they've got 6 cars they've signed on, right? Their co-signs on, whatever it is. So I think it's valuable if agents can actually get to be a part of the process, and they can qualify. They can learn the basics.
Sure.
We're not going to pull documents. We're not going to look at their checking accounts, but we can at least say, okay, you make $100,000 a year. Yes, you can buy a $300,000 house because you only have 1 car note and no other debts, right? There's some things you can kind of like calculate, and DTI is not a hard calculation.
It's not. It's a simple math equation.
All right. The last thing is I did have one recently. Okay, this is important. I know a lot of you may gloss over what we're talking about. Like, of course, we need pre-approved people. The problem is that we're in a market right now where we have a high fallout rate on contracts. And buyers are looking for any reason to get out. And one of them, the most common late contract get out clause is the third-party financing not getting approval. So it's important that whoever's on the other side is competent and can do that. I just had one happen. The buyers owned a house. They did not have to sell the house to buy our house. And I did not do my due diligence. I took them at their word. Okay, that sounds pretty solid. And then the lender gave me the pre-approval. So I had like 3 really positive reasons. Right. There's no reason they won't qualify. And literally right after the option period, they bailed because they don't qualify. Unbelievable. And now who looks bad? I do. I look stupid. Right. Because I went through that and I didn't have someone that was ready to go. So that was on me. Let's keep going because we got a lot to cover. How about speed? Okay. So lenders, they can't wait a day to get us estimates on payments and estimates on cash to close, right? We need to get something reasonably quick because buyers are emotional. And we know between the lender and the agent, the buyer wants to talk to the agent. And this is the illustration I gave before. Agents are like Disneyland. We have all the gold. We're exciting. And lenders are like the dentist. It's a necessary evil we got to go to. And then the lender's now going to make you get naked.
Yeah, I don't feel like a dentist, man. I feel like I'm a pretty fun guy to work with.
Hey, I told you I'm going to have sharp elbows this time.
It's okay.
But they are.
Good.
And because now you got to like analyze everything. You got to see all their personal secrets. And it's not something that anyone really enjoy. I don't enjoy it. Even when I go and get loans, I know I have to go and get loans. And I might have a partner I'm working with. Now they got to know all my personal business, right?
That's right.
So keep that in mind.
You're exposed. You're swimming naked is what you're saying, and at the end of the day, nobody loves to look down and realize I don't got any shorts on right now and the tide's up, right?
So be realistic with this. I know Devin, I could be, the buyer could be pinging you on every house they see. Hey, give me an estimate, give me an estimate. We have to have the conversation.
That's right.
Okay, let's focus on one and then use that as a baseline. It ain't going to change very much if you pick in the same price range, right? So have some conversations.
Yeah.
But making that quick response, how do you guys deal with that? And that's an important.
Well, I love that you said that because I've got a trick up my sleeve. So number one, we talked about speed to lead. And I think that's really important. That's something that we coach on here often at Premier Lending is speed to lead. Make sure you're in touch with your consumers quickly, but also make sure that you're communicating that back to your agents. And there's a lot of different ways that you can do this. So I'll start with the lead process. So when a lead comes in, effectively, we want to reach out to that client at least 2 times by phone on the day number one, but we also want to send a text and an email. And, full disclosure, we might have an automation on this that helps with the text and the email, but the phone calls need to come from you directly. And more importantly, you want to include your agent partner in that. We have another process we call touch the lead, touch the partner. So when we reach out, now, not that you need to know every single touch point, but you do need to know, hey, we talked to him, reached out twice, didn't get a hold of him, or we did get a hold of him. This is what's going on. Second part of that is, and this is something that you and I spoke about in our pre-planning call, is we have a CRM software that has an agent portal. Well, what I didn't tell you is it also has a borrower portal. Okay. So what that does for us is the agent immediately when we get that lead can see the lead, they can see it exists, they can see when we're reaching out to the consumer if they want to use the portal. Some agents love it, some don't, right? Because we all have our own systems and processes. But a good agent partner is going to love this because they can see what's happening, not just on that lead, but any lead that they've provided to myself or one of our team members. This is where it gets good for the client. So once we've pre-approved that client, it has a portal for the client with the pre-approval. They can go in and they can actually look at the pre-approval, but they can also self-serve. So if they want to go out and look at a different property and they want to know, am I going to qualify this property? What does the payment look like? There's literally a back-end system that allows for them to go in and they can modify the taxes, they can modify the insurance, they can look at what that's going to look like in a payment. And more importantly, it also have the contingencies. HOA can't be more than this. Insurance can't be more than this. Taxes can't be more than this, or they're not going to qualify. So that is a secret weapon. Now, again, some people don't want that. Some people still want to talk to you face to face. And that's where if we get a communication from a consumer or an agent, we are going to respond back within an hour to 2 hour radius, if not faster, just depending on whether we're helping another client or not.
Okay. And that's important, right? Making that connection and making the response. And I've certainly worked with buyers that come to me and they have I have my own pre-approval. Okay. Would you like to get a second opinion? Right. And they're like, no, it's my family friend. They've sold us 3 houses, whatever.
Yeah.
I said, okay, great. And because they didn't have to work or earn that deal, the lender, they will communicate when they're ready. I've done this enough times.
The old phone a friend loan officer.
Yeah. So I got to get them on the phone and they all have the dog and pony show. Like, oh my gosh, yeah. I've sold, I've been doing this for 10 years, 12 years, whatever. And most of them have been doing it a long time. That doesn't mean they're good. That doesn't mean that they're really proficient. That doesn't mean they're using modern technology. It just means that they've done enough loans to stay alive. Yeah. And pay their bills.
And some are great, Sean. Some are phenomenal, right? It just depends.
Well, for sure. But this is when we don't have that agreement. And I want agents to realize these things are going to happen.
That's right.
And value having someone that's readily responsive and wants to continue to impress. That makes a big difference.
That's right.
So just keep that in mind on getting that. The turnaround times are real important because we'll be sitting there waiting and a buyer will not sign a contract if they don't think they can qualify.
Yeah. Well, one point I want to put on that as well, when it comes to the third party lender, right? So agents, if you're a buyer that happens to jump onto this call and hear what we're talking about, agents have preferred lending partners for a reason, right? And that's because they have confidence in these people to be able to get the client to the closing table on time with little to no headaches. And again, you may have a great family friend or somebody that that's in the industry, but that doesn't mean that they have a proven track record. And so the agents want to put you together with somebody that they can have confidence is going to make certain T's are crossed, I's are dotted. They know the team members. They know how each other works, right? And, at the end of the day, if you have a great lending team with a great title company that have all worked together in the past, it truly is a team process. You're going to have a much smoother process to get to the closing table. And I think that's what Sean's talking about.
It makes a big difference, right? If you have partners involved, then I have some type of I'll say in a nice way, leverage, right? With each one of them, they owe something to me to make sure that my client is taken care of.
That's right.
And it makes all the difference. It could be, contractors, inspectors, title companies, lenders, insurance partners. I have an insurance partner that's as a sponsor of my podcast as well. And it's because he beats everyone's deal because he can shop every single market.
That's right.
He gives me a response immediately when people need to get an insurance quote, an EOI on a property they're buying. I've actually, as made it a part of my business, I actually do clue reports on homes I'm selling. Yeah. And I think all of you should consider that. It doesn't cost you anything. It costs the insurance partner something, but a clue report will tell you if there's any claims or anything like that. That really helps, certainly for lenders to know. When you know that up front, now we can go look for that claim. Now we can go make sure that the roof was replaced. Now it answers questions before they come up. That's why these things are really valuable. We're not going to talk about selling homes right now. Let's talk about speaking the buyer's language. Have you ever heard anyone kind of say that before? Where
DTI, LTV,
yeah, I mean,
front end, back end ratio.
Sure, and I think I'd say most lenders, I would say, are probably less colloquial, right? They actually do kind of speak in some layman's terms, but I'm even going beyond that. When buyers, if you say, how much house can you buy? They don't really know. But if you said, how much can you afford per month? They know immediately.
That's right.
Right? Because they can relate to their payment now, their rent, or their mortgage payment now. They can immediately relate. That's the language I'm talking about. What do you say when you have lenders that get in there and say, okay, well, you can buy between 425 and 450. Okay, I don't know what that means.
Yeah.
I mean, how do you, what is it that you tell or suggest?
Well, I think, Sean, first of that is a great interview up front. What are we trying to accomplish here? What are we trying to solve for? Right. Is this your first home? Is it going to be a move up home? Do you have a budget in mind? And what does that look like for you? Right. Do you plan to be here for a short term or a long term? Okay. And by asking the right questions, it's going to allow for you to really help understand what programs are going to fit that client's needs the best. So for me personally, I think it's really important to find out that information up front, right? What's the payment point that you're looking for? And then we can transition that over to, well, this is what that's going to look like in a house. And one of the biggest things that I found, Sean, is that clients, they've already done the math a lot of the times to determine, hey, if I buy this much house, this is what the P&I payment will be, or principal and interest payment, right? But what they don't think about is the escrows. They don't think about the taxes. They don't think about the insurance. And assuming that they might be in a government loan, FHA, they're certainly not thinking about upfront mortgage insurance premiums or monthly mortgage insurance premiums. So when you're working with a first-time home buyer, man, what a payment shock that is when you sit down with them and say, let's walk through what you can qualify for to hit the payment range that you're looking for. And a lot of the times you'll hear the feedback of, oh, wow, that's way different than what I expected it to be. I wasn't calculating for these things. And that's why it's so important to have that conversation, because that's most certainly going to be a part of the payment. And ultimately, that may change the price range that they're actually going to start feeling confident searching in.
I love that. And it's really obvious the problem, right? So Realtor.com, Zillow, every one of them, you go on that website, they're only going to tell you principal and interest.
That's it.
They're only going to tell you principal and interest. And they're going to assume things 10, 20% down. They might put 20% down.
That's right.
Just to make that payment really low and not have any PMI and make it look really attractive. So
and advertise a teaser rate that only people with higher credit scores and bigger down payments are going to actually qualify for.
Of course. Yeah. So they're paying rent. They're paying $2,500 a month. They can start looking at things that are $500,000 because it's $2,500 a month and just principal and interest.
That's right.
And then they realize, right. Oh, wait a minute. This is really $4,000 a month once you start adding in everything else.
So what you're saying is language matters. Agents look for this, and they want to know that when you're educating the client on what they can qualify for, that you're talking in a way that the client can truly understand and relate to, so that, again, we're not throwing somebody in the car and driving out on hopium. I hope I can purchase this much house, right? We know we can purchase this much house, and we know confidently that it's going to fit within the budget range that we're comfortable with.
I love it. I'll give agents out there a bonus tip. If you, and every lender partner can do this, they can create a scenario for a house, if you're listed between 300 and 450,
That's right.
you can create a no down payment scenario with a 1 year buy down. That's not very expensive.
Mm-hmm.
It's maybe 3 to 5,000 at most. And you just build it into your sales price.
That's right.
And they can offer that, and they will come in, 400 a month less or more.
That's true.
And you can now have a offer to buyers that are looking, and they see 3 houses, and you're offering your house at $400 to $500 less per month. That's a value add proposition that costs you nothing. And your lender partner can create the information. They can create the flyer. It's really easy for them to do. So that's an easy value add tip for agents out there.
It's a value add. And we also call it a sneaky trick, right? Because a seasoned veteran like yourself knows these tricks, right? And they're not a trick because it actually works. There's a benefit to the consumer, but it also helps you more marketable for the properties that you're presenting out there. So
sure.
I love that one, Sean.
How about this, right? The market, lenders need to be on top of, and they should. I think all of them know kind of where the market's at. They follow the agents and they know, is it a seller market? Is it a buyer market? What's our issue right now? Obviously, interest rates is still probably the hardest thing to overcome.
Right.
I believe that lender partners, when they get on the phone with an interested buyer, one of the biggest objections is, why buy now? So what do we tell, and what do lender partners, what is their way of dealing with that, right? Because that's going to come to them, and they need to handle those.
Well, I think that's a great question, and it comes up often. And one of the things that we've got to think about is rates aren't really high. We think they're high, and the reason we think they're high is because we kind of entered the perfect storm, right? Ultimately, we had rates in the low 2s. And ultimately a lot of people qualified there, and they started to feel like that was the norm. But then in addition to that, we saw market values, even at the DFW, pop anywhere from 10, 15 to 20% in a very short period of time. And then we've got inflation on top of that, which that perfect storm makes the home feel a little less obtainable because the rates have evened out to where a more average rate environment, right? When I got into the industry in 2002, we had rates at 6.5, and that was a refinance boom, right? So historically, where we see rates today is actually fairly average, right? But why buy now? Why buy now and why not wait? Well, this is something that I think is really important, because what we know is that homes tend to appreciate 4.5% to 5.5% every single year, right? Now, we may see some corrected markets, and we may have seen some recently. But if you look historically over the last 80 years, right, we've only had 8 markets where homes have depreciated. So that means that your money is very well protected, because I can tell you right now, you talk about that on the stock market, and at the end of the day, if you invest your money there, you don't know what that's going to look like. With homes, we know 4.5% to 5.5% per year. What that also tells us is the home that you're going to buy today is going to cost more next year. So even if rates improve between now and next year, the home that you were going to buy is going to increase in value. Okay. In addition to that, let's say that we did have a massive rate drop and rates drop to 4.5%. What's that going to do to the market? Everybody that's been sitting on the fence waiting is going to engage back into the market at the same time. And now all of a sudden, homes that have been sitting are going to be homes that are starting to have multiple bid opportunities on top of. So that means that the home that already went up 4.5% to 5.5% now is going to have a multiple bid offer, which means that you may not be able to find the home that you actually want, right? And if you do, you may have to win that bid by paying more for it just to win the bid to get the better rate. The person that buys now gets the benefit of the market improving. They get the house they want because right now sellers are willing to negotiate. Okay. And more importantly, if the rates drop, we simply refinance, put them back in a better financial position. They've gained the equity, and they're in a position to where they have the house that they actually want, not the house that they got accepted because 10 other people put an offer on it.
It's funny. Agents roll their eyes when people say, marry the house, date the rate, or date the rate, marry the house. I don't have a problem with it. I think the idea is stop being consumed by these other variables.
That's
How about
right.
we do what's best for your family?
Yeah.
At the end of the day, whatever's best for your family. If it's staying in an apartment and losing 100% of your money, and you don't have to consider other variables, and that's best for your family, then stay in the apartment.
Yeah.
But if moving into a home and start building, and no one really can put their face or name on the emotional impact it has by owning a home versus renting. Like
That's right.
things change. Now it's yours. Now you're
It is.
the American dream, as they say.
I love
You know, it starts coming into fruition. Now you get to make decisions for your own home. No one
Yeah.
else can tell you. You're not an employee of the landlord. You get to make your own decisions.
Well, I love that you said marry the house, date the rate, because honestly, I hate that slogan, and it is a little cringeworthy, right? But I think at the end of the day, it's the shortcut way of saying what I just said. But I think right now consumers need to hear the full walkthrough to understand what that really means, right? Because quite frankly, you could have summed it up in marry the house, date the rate, right? But what does that really mean to the consumer? It doesn't. You talk about talking in layman's terms. Well, if we talk about what the market's done in the past, what it's doing today, and how that's going to benefit them long term, now they're going to have a better understanding of what that really means. And the other thing that I want to point out there is, guess who's out there scooping up properties right now, left and right? Investors.
Yeah,
Investors are scooping up properties left and right. So let's talk about that. If this is a terrible market to buy homes in, why are investors buying up all the properties?
Because we had 3 years of frozen property values. They are going to go up. I don't care how many people tell us that we're going to have a crash. I remember this two years ago, after, or even right when the interest rate finally took that spike, everyone made this prediction that we're going to have a crash. And I kept saying, I don't know how it's possible. We don't have enough inventory.
Yeah.
We don't have an abundance of inventory that's forcing the prices down. And they didn't. And in fact, it stayed the same for 3 years.
That's right.
Good or bad, or however you want to think about it, at least they didn't, lose 20%. They just didn't go up, and that's just kind of part of it.
Well, Grant Cardone said something the other day. He had posted, directly to this point, and he had a very specific strategy around it. And I'm not going to get into the strategy, but what he said was, go out there and steal you some houses right now, right? Steal you some houses, right? What he meant by that, I don't know if that's exactly what he said. He's basically, if you're an investor, this is the time to go steal a home because people are motivated to sell. And at the end of the day, this is a great time to start building your portfolio, which is your net worth. And this is a gentleman who's literally made himself close to $1 billion, if he's not there already, as a car salesman from Houston that transitioned into real estate and did this from, being somebody that had no income, not no income, but came from no wealthy background to now becoming one of the wealthiest men in the United States.
Well, he knew how to make money work for him and how to work for other people. And he built a business on it. Very successful.
He did. 100%. So
here's what I'd like to do. We're only about halfway through. We're already more than 30 minutes in. And I think that I think this would be good to do a part 1, part 2.
I'm good with that, Sean. I think that's
because I think this is a lot of good information. I've got some good ones. I'll give you a couple of teasers, right? We got problem solvers.
Hold on real quick. How am I doing so far? You said you were going to grade me.
Your answers are subpar. No, I'm kidding. I think you did great. You actually have real solutions because you are in a different position. I'd give you an AA plus. I would. And the main reason is because I'm talking to someone that's had to go through all these issues and failed probably at a lot of them.
Absolutely.
And realize that if I don't have a solution or response to deal with these type of headaches, and I'm prompting you through all these things, then you're not going to be able to continue to build a successful business being able to respond and deal with them.
Absolutely.
So you want me to give a few teasers for the part 2?
Let's get teased, man. Tease it up.
So we've got one of the things that really is a struggle is lenders are not able to solve problems, and they end up killing deals without any type of, and I know they don't maybe like to use the term creativity,
right?
But you have to get outside of, well, FHA is not going to work in these boxes and these channels. We're going to have to get more strategic, and you're going to have other items in your toolbox. There's 1,000 ways to close a loan.
That's right.
We all think there's only like 2 or 3. No, there's 1,000 plus. Yeah. So you got to get creative. Help convert leads, right? That's a big part of the process. Often we just keep getting these opportunities, and I've partnered with lenders, and they've got thousands of my leads in their box. They do nothing.
You got to hold me back because I want to answer these.
Oh, no, we can't. Let's communicate proactively. Often we only get bad news and we don't know which direction we're going. When you see things and when you're an experienced agent, and this is where the lender can help, experienced agents, I have a feel about things when I know things are not jiving. I just know.
Yeah.
And you as a lender, you're going to as well, and being able to predict and say, here's some headaches we got to deal with before we get too far down the road. We could talk about that. Protecting the agent-client relationship, making sure that that client comes back, or if they are saying bad things about you, you can defend. Bringing business back when they close in the future, make sure that they come back. Help the agent market different things. There's a lot of ways that you can be a part of that process.
That's right.
Understanding negotiation from an agent's perspective, not a lender's perspective. Get out of the static information. There's some really good things there. And then at the end of the day, let's make the agent look good, right? Because the objective is we need to build the relationship, and build something together, and everybody wins. Right? That's really kind of what we're looking for. And how do we do that? And it's got to be beyond, yes, I know how to close a loan and do my job.
Well, that's Loan Officer 101. If you can't do that, get out the business. Go. Sure. Just find the door wherever it is, exit, go do something different.
And I'll probably have a few more surprise questions next time as well.
I like it. Well, you definitely have teased my interest, because I just want to fire away right now, Sean. You got me. I'm like a bulldog or a pit bull on a leash. But you know what? We're going to have to save this one for the next week. So if you like where we're heading with this, if you love those teaser questions, come back next Friday, 10 a.m. Central, and we're going to be here to answer those questions. Your lender partner should make you more money. What are we supposed to be doing, lenders? What are we supposed to be doing for great agents out there like Sean Corbett? So, Sean, I appreciate you as always, my brother. Love doing these podcasts with you. Any closing words before we wrap up today?
No, but I will say this. This actually is important. Who you partner with does matter. It does. No matter what you do, when you partner with your inspector and he keeps forgetting everything and leaving buyers in a bad position, you partner with title companies, they don't communicate. And certainly lenders that leave you looking bad all the time, you're going to hate the business. And you don't know what you don't know. So talk to an experienced agent about what should I be looking for in that type of scenario. They're not informing me. They let me down on this. They told me they were approved. Now they're not. Let's make sure you partner with people that have a common vision with you in order to build a successful business.
I like it. Well, guys, if you want to follow Sean directly, I'm running these right across the bottom of the screen, but go look for him on YouTube at RESDFW, Sean Corbett. That's Sean SHAUNE. And if you want to find him over on Facebook, it's just Sean.Corbett. And then if you want to find him on Instagram, you're going to find him at Sean Real Estate Solutions. And make sure that you subscribe the page. That's what we're doing this for. We want to keep giving this great content, help you level up your game and build a community, right? That's what it's all about. So until the next time, guys, we will see you then.
Awesome. Thank you.
Thank you, brother. Thank you, as always. You've been watching Loan Officer Success Live, where real strategies meet real success. Don't forget to subscribe now and share it with your teammates, and keep leveling up, because your next breakthrough starts here. If this fired you up, don't just watch success, go out there and build it.